Have we started a pullback? Is this the move we've been looking for? Time to buy puts? Time to short the market? Let's talk about it. Little risk disclaimer. Last Friday we talked about what could happen this week in the market. I'll put the link to that video here. Pretty much what I came up with last Friday. I was saying, hey, I'm not too bullish going forward. Looks like there's an opportunity to pull back. So just going back over some of the stuff on the Dow. Here it's Wednesday, the 23rd of January. We've pulled back about 1% across a lot of the major indices. And so we're taking a look here at the Dow. I thought that we had an opportunity to go maybe a little bit higher before we hit this downtrend line. Looks like we're starting to pull back a little bit before that. So just looking at the Dow, you can clearly see we're still in a downtrend. We haven't made a significant pullback yet. However, the markets have gone a little bit sideways. What we can see, however, is in looking at the Qs, we get a little bit clearer picture. Here, the Qs actually have touched a downtrend line. I think another thing that's really interesting here is if we go and look at the actual Fibonacci price retracement lines, real big on these Fibonacci price retracements. If we come down on the Qs with the price retracements from the high that was achieved back in early October on the Qs, and remember the Qs, they're essentially just an ETF for the NASDAQ, and you can use the IndX for the NASDAQ, the actual NASDAQ index itself. Qs is just really commonly traded, so I like to use these. If we look, we've retraced to the 50% mark on the Fibonacci's, which is a key level of resistance. So you combine the fact that this downtrend is intersecting with the 50% retracement lines on the Fibonacci's, and you've got something pretty interesting going on. So there's a lot of evidence for a little bit of a pullback. I'm not saying a true market reversal, but I'm saying a pullback nonetheless. So right here, 50% line correlating right directly with this downtrend line. Let me show you something else. If we take the recent high and we do this, we have the 76.4 retracement area right here where the Q is, where the Qs are, where they seem to turn. We're actually holding here at the next Fibonacci level. So let me zoom in real quick just so you can see this a little bit better. See, the price came up, hit this downtrend line, and actually we're holding support at the 61.8% retracement on the Fibonacci. So not too surprising that that's what's going on. However, it is something that we were anticipating last week. If we come over to the Russell, I'm just going to take a look at the IWM. This is another ETF. I like looking at ETFs, so because they're just more affordable to trade, really, and the options are a lot more liquid on these. So if we look at this downtrend again here on Monday, zoom in. On Monday, the price approached this downtrend line. I drew a horizontal resistance line here. You can see that back in April, we found support on this area. We also found support here in March previously, and so you can see that we actually have toyed around with this area of support many times, right at around the 148 mark. So 148 marks an area of consistent and historical resistance and support for the Russell 2000 ETF we're looking at here, the IWM. And so you can see that the price has come up here. Our MACD has begun to turn, and that's also correlating with the downtrend line. If we look at the SPY, which is the ETF for the S&P 500, same thing. We are looking at more of kind of a downtrend here. Let me draw it for you real quickly. So if we're looking at this downtrend here, we got close to the trend line. We didn't quite touch it. Again, everything we do is not an exact science. I was thinking that we had an opportunity here. If we got a little bit higher, we would have somewhere up here. If I drew this, here's a support line was tested here, here, here. You see this area has been tested many times. So I was looking for this area right here, but I think what really threw a wrench into everything this week was the Qs. I mean, the Qs lined up just perfect for this move, and so the move has begun. Now, I am anticipating that this move will probably fall at least to a retracement of the previous up moves. So if I take and I draw the Fibonacci price retracement lines here, I wouldn't be surprised for us to come down to at least the 50% mark which is down here on the Qs at 154.20. Currently we're at 162.15, so we're looking at about $6 lower just to get to the 50% area. 61.8 seems to be a little bit more common in my experience, and so that's down here at around 151.57, so we're looking at about another $11 down on the Qs. So I'm not thinking this would be a full bearish reversal to knock out recent lows, but certainly enough of a move to kind of digest a little bit of this up move, put a little bit more wind in the sails of the bull market and allow it to continue up. Or maybe it is a full-on reversal. We're going to trade it. We're going to make money either way. Again, it's all about risk to reward ratio. I could talk a little bit about that more, but that's what we're looking at here. And so right now, pretty bearish. I talked in a previous video, I put the link in the description on this one as well. I chose 5 stocks this week that I was looking at shorting. I want to go over one in particular. All of them have made money, but Twitter in particular. This is one I drew a downtrend line on the video I produced over this past weekend. I said this is a really good stock to be looking at for shorting opportunities. So if we're looking at Twitter here, when I made the video, we were right here at around 33.27. Right now we're at 30.97. You say, hey, this isn't a very big move. Well, it's not a very big move if you're shorting the actual equity. If you're shorting the equity, that's not huge. But what could this have been with an options trade? I want to take a look at that real quick and dive in. So if you'll bear with me for just a second, I'm going to pull up, just because we started the week off here at 33.27. I'm going to assume that we entered a trade here at the end of the 22nd, which would have been Tuesday afternoon. So I'm not going to say, hey, we entered it last Friday. After everything got started, let's just say it was Tuesday afternoon. We closed around 32.25. I want to look at the $32 puts, okay? So let's take a look at the Twitter $32 puts. I'm going to look up the symbol here. We're going to go to options. We're going to go to Twitter. We're going to look at the put options that expire this Friday, and we're going to look at the $32 puts, okay? That's going to chart just like the equity. I'm going to zoom in just so we can see the price. So yesterday, at the close, we had 52 cents. So 52 cents would have been what we purchased for the puts. Remember, puts appreciate in value as the market falls or the equities fall in value. So this closed at 52 cents. Today, this closed at $1.12. So you don't have to be great at math to figure this out, but let's just go ahead and take $1.12, right? Now we have to multiply that by 100 because we always purchase options in 100 round lots. So that would have been $112 per contract. That would have been the value today. Now remember, yesterday we purchased these at 52. So let's go ahead and subtract our entry price of 52. So that's a profit of $60 on a $52 investment. That is a 115% return in a single day just today. That's why this move on Twitter is so significant. That's a $100% candle. So if you would have placed $1,000 in there, well, you would have made over $1,000. If you would have placed $10,000 in that trade, you would have made over $10,000 just today in that one single trade. I also covered Baidu in a recent video. I said that you shouldn't have favorite stocks, but I really like this one. So I was talking about how easy it is to see this trend in Baidu. So I wouldn't just trade Baidu without the direction of the overall market going with me, but when you combine Baidu with the fact that the Qs are actually turning down and so overbought on the stochastic slow here, I mean, it's easy. It's not hard to see that this would have been a profitable trade here. So if I come down to something that's not a daily chart, I'm gonna look at something like more of a. There we go. Let's look at a 4-hour chart here. Now this starts to take a little bit more shape, and you can actually see that we have MACD crossing, and these moves are going down right here. So just to show you kind of how I handle this situation, I want to get more into this as I progress and make more videos, but when I'm getting into a trade like this, actually I'll go to Twitter just because we talked about that one specifically. If I'm looking at Twitter and I'm wanting to get into a trade here, what I'm going to do is I'm going to say, okay, right here, That's a recent high that we've placed into it, or that high of 33.89. If I get into the trade, say right here at the bottom of this candle to short or to buy puts at 32.26, I want to allow myself in a little bit of margin of error. Okay, so I'm going to move this up here, and I'm going to place a stop right here. So if the price comes back up and touches the stop, I want to be out of this position, because obviously this down move that has started is not ready to fully take place. So I want to be stopped out if it goes up here. But what I'm going to do is whatever that stop is, okay, wherever I have that stop, I'm going to go ahead and use a snipping tool real quick just to grab this screen so I can draw on it for you. Okay, so what I'm going to do is right here, I'm going to have an amount of risk, okay, and I'm going to define that with a red R, okay. So 1R is going to be my risk, and that's going to be the difference between my stop and where I actually entered the trade, okay. So let's just say I entered right here. That's going to be 1R. Now what I'm going to do is I'm going to place a price target right here at either 1.5R or 2R. Okay, and so what I'm doing here is I'm mitigating my risk. So if I'm wrong, I only lose 1R. Let's just say I only want to lose $500 in a trade. I will size my position so that if the price comes back and touches this line, I will lose $500. However, if I am correct and it moves down and the price goes in the direction I thought it would go in, I'm going to make 1.5 times the amount that I risked, or maybe 2 times that amount. Okay, over time, I only have to be right, let's just say 30% of the time, to end up making money. That's going to depend on how far I let it actually run before I close it for each position. But the whole point is, have a trading plan. Have a trading plan that deals with risk very specifically. Have a plan for how you're going to mitigate risk, how you're going to plan the trade, and so on and so forth. I want to talk a lot about that going forward, how I do it. I want to show you some stuff in real time, how that's done. However, if you just follow this simple rule of defining your risk before the trade and making sure that you consistently make more your closing trades that make more than what you actually defined as your risk before you got in, it's a winning formula. I mean, that's the trick. If there is no magic when trading. There is no magic pill per se. However, but this is the thing. Consistently losing less than you make whenever you are right. When you're wrong, lose less than you make when you're right. That's it. So that's the way I would handle this situation. So if we are wrong and the markets are truly not turning, well, I'm only going to lose the amount of money that I'm comfortable with losing, because I'm going to lose 1R. However, if it goes down, I'm going to make 1, 2, 3R depending on the positions that I've placed. And as you can see with those options, it's really easy to bank those profits, lock in those profits quickly. More to come. I wanted to keep this video short. Just wanted to give you this update. I'll do another update on Friday. All right. Hope the rest of the week is profitable for you.